Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory, using the volume profile as a chassis in the intraday developing time frame. Can I please get a screen and audio check? Can I please get a screen and audio check? Okay, and how we doing in YouTube? Thank you, Justin. By the way, I got a little gift here I want to put in YouTube. It'll only take a second. I got to find it, though. It's a 30-minute short trade example I did from a number of years ago. It's got over 6,000 views, and it was kind of lost. I think it was that one. No, different one. I don't remember. It might be the one that got lost. It didn't really get posted. I think I don't remember where I was when I did it, but I posted it. In fact, I don't know if Dan is in the chat. Dan or Steven, are you in the Discord? If you could grab that one, are either of you in here? No? Okay, I'm not going to, maybe I can find it later. It was a short trade example. I am going to try to find the link. It'll only take me a moment. Let me see where it might be. Yeah, here it is. Guys, I'm going to put this in YouTube. This is something, a gift for you for this weekend. And it is a short trade example. It's very concise and it's brief. Let me give me a second here. And you should watch this weekend. And it is being posted right now. Grab the link, because I don't know if you can get these links after the fact. And there it is, short trade example. It's about 30 minutes, very concise. Hope you guys enjoy it. Okay, this is the Trader Lab, and this stream is based on structured trades using a volume profile and integrating with order flow with the Bookmap application. And it's based on structured trades that are available to everyone, as you guys know, in the Bookmap Discord Trader Lab community, and there's no cost for it. It's based on structured trades. There's a template of structured trades you can download, plus not only that, but a library of webinars on this process that I share every day. And you're all welcome to the Trader Lab. There's no cost for it. There is a link in the bottom of YouTube if you are so inclined. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Grab a pen and paper. I'll give you a couple statistics today. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get to real time, we'll talk. And in fact, if you guys review my stream, you'll see most of the time I do get into real time. Also, if you want real time narration in the Trader Lab library, there are streams that I've done of real-time narration, 4 or 5 hours long, full RTH. So if you're inclined, feel free. Now, this is an example of what the structured trades look like. These are templates. They're not mechanical. Most retail traders think plug and play, go to a chat room, hang out with some guru, and you get this thing of this is the only thing you need. And, come on, let's get real here. This is trading. So if you want to be in a professional environment and you want to take advantage of some experience, I've been doing this almost 46 years. I think I might save you some time. And it doesn't mean that this will ever work for you because trading is not for everybody. Here's the higher time frame. Now, if you guys have been following this stream, you know this is a consolidation. And coming up on the day before yesterday, and I know this is a little busy looking, this was our target. So for ever since this was here all these days. If we got a breakout, we were going here as a target, right? So we hit it on that nail on the head. It was the high of the day for this day before yesterday. Then yesterday, we were looking for long continuation trades, and this is the target up here, 57.18, and there was another one at 56.90-ish, two of them actually. So now, but here's what's interesting, and I was looking at this, and yesterday it was longs, and then later in the session, I started taking shorts. And I kind of found it a little strange myself, except I just follow a trade plan because I can't predict anything. Can you? We're not in the business of prediction. We're in the business of maybe. So maybe it'll do this, maybe it'll do that. But how do you recognize when change might, remember, maybe, might be taking place? That's what trade plan is all about, because we're not making it up. But most retail traders are playing a video game and chasing rotations. I'm going to suggest to you that's not what creates sustainability. To build the business out, you got to really understand the business you're in, and you need a vetted, structured plan that is all prepared outside of trading hours, and you basically show up. And then when the trade shows up and things are aligned based on your plan, you put your trade on, you take your risk, you take your stop, or you get your target, or whatever it is you plan to do. But you know beforehand what you will do, because you cannot know what the market will do. So what did the market do yesterday? It went up. It's wonderful. Then what? Well, we sold off. We didn't get our target. And it's like, hey, well, I started taking shorts. And again, I'm going, I don't know. Because what do I know? How about this? Would you like to know what I know? How about this? I don't know. If I know I don't know, I'm not in the prediction business. I'm in the business of maybe. I'm in the business of random rotations, and I'm in the business of alignment with the current condition of the market in the time frame or fractal that I trade. So why did this happen yesterday? Well, I was thinking about it just like you do. And I said, well, we have earnings coming out, and we have NFP this morning. If you were long in here and you were long yesterday, what might you do? And again, nobody knows. We could have just kept going, right? Respond. Respond to the higher pricing and take some profits just in case. So that set up yesterday's selling. Now, nobody knows. So I thought about this just like you do, and I go, what? So today I was prepared for continuation lower, or this was just selling ahead of the report, and then continuation with the trend, which is up, and this is a target up above. And again, not a recommendation, clueless, right? Yeah. So let's look at what happens. Now I'm going to take you into some actual trades. I'm going to show you something I normally don't do. I'm going to show you some of my trades today. And I'm going to show you, remember every day I say, I take stops. Guess what? I take stops. And by the way, I know we don't like stops. Very disturbing. Here, let me show you this. So I'm going to show you these trades. Now, the time scale's cut off. This is, let's see if I can get this for you. Okay, RTH open. Now, I have two locations. So let me give you the explanation. Well, sorry, I forgot something. Let's go a little further. Sorry. I have so much to do in so little time. We opened. Now, this is a contextual condition. What's the condition of the market? If I understand the condition of the market, I am prepared. Remember, we're talking trade plan. And you have to vet this for yourself. This is my plan. I'm not saying it's a good one. I'm just saying it's the one I got. And the reason I say it's not a good one, because it might not be good for you. It's good for me because it aligns with my psychology. All of this has to fit inside your mental state. Some traders are only going to, like, for example, the trend's up, right? Why would I be taking shorts? Isn't that an interesting question? Well, here's the answer. I could be taking shorts. I could be taking longs. I can be skipping the shorts. I can only be taking the longs, or I could be taking both. You see what I'm saying? If I anticipate a short, and I'll tell you why in a moment, then I can take the short to take the long. And by the way, this is the short and the long happened here. And I'll show you that. Now, let's see why. So we opened out of range. The open's there. And I think yesterday's high was somewhere right around here. Hold on a second. I want to get this all right for you guys. Yesterday's high. Can't find it. I think it's 82 half. Yeah, it's covered up. 82 half, right? Yesterday's high. There's stops here. RTH opened, so we opened higher out of range. Remember that. So first of all, we're in a gap. We are above settlement. We're out of range, okay? So what the market is currently out of balance. Now I'll explain more of this to you. What does it mean? Well, Friday, and all this is posted in TraderLab before the open. Here's what to anticipate, not predict, anticipate. We haven't seen gapping go opens. In other words, gap higher and the thing goes like a bullet train. Haven't seen much of that. If it's Friday, we anticipate if there's longs in the market and we open a little higher, maybe they're going to take some change off the table, say, hey, thanks for playing, and they take the coupon and a little bag of winnings, and they get their hotel room comp in the casino. Hey, you had a great time. Thanks. I'm going out of here. I'm going in the Barca Lounger. So market's out of balance. So we anticipate something called responsive selling. They are responding to the higher open, and they are already long. They are responders. Responders are not the strong side of the market. They are the weak side taking profits. Does that make sense? Please give a like, by the way, if you like this. So what do we do if we see this selling? Well, I'm looking for this selling. And here's why I was looking for it. First of all, well, I got to go a little further. So what do? We fade the gap back into balance. I'm going to show you balance. And what do we do then? We're looking for it to test the previous range, which is yesterday's high, and the previous value area high, right there. So that's the first trade. And then, does the prior range hold? If yes, fading is no longer valid. Time to turn the cart around and get long. So what do I have? Short, responsive, selling, location, 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 longs, continuation. And then it's out the top, and I have targets above. So I'm going to explain. Now, let me give you those statistics. I hope this is useful and that I'm not wasting your time. Let me know. Give a like. And if this is not what you need to hear, let me know, because we'll skip it. And I'll just show you the good, the bad, and the ugly. So we opened higher outside of range. Here's some statistics. Take a note, and you have to vet these for yourself. This is TraderLab. There's a 96% probability-ish that will take out either the first hour's high or low. That's called the IB. There's the first hour's low. Actually, it's over here because this didn't catch up when I shot this. And this is the first hour's high. Taking out the ETH high or low, 93% probability. Well, whoops. I wonder if I can. I'm going to show you something else. We'll get there. Taking out the first hour's high by itself, 68% probability. Looking higher. I think that'll do it. So these are the first shorts. The liquidity was here, and at the so I was looking to fade this, and so I had absorption here, right here. What happened here is I took the short here. I took a stop because I was leaning against this. I said, well, that's enjoyable. So bang, bang, you could see where I was going, and my target was here, overnight volume point of control. Why would I target the overnight volume point of control? Sometimes I ask myself the same question. Almost an 80% probability. Okay? So I'm responding. Here's another rationale for this. If this price is the retail price, if I find too high and the liquidity was here, this is what I was leaning on. So it went bang. Actually, it kind of touched here, came here. And so I sold it, and then I took a stop right here. Okay, wherever it was. Actually, I sold it here. That's why. Okay, I sold it here because I have something called VPOC migration. I'm also aware that the opening swing high is vulnerable. I want you guys to know this is a highly aggressive trade. And in TraderLab, I do not encourage traders to trade the open. I take stops, of course, like everybody. And I always say, I always take stops. Everybody does. Now, VPOC migration. I come up, I get absorption here. This is order flow. I take the short here. This is the variable high volume node. What's a variable high volume node? This is the price that was too low. Now, new retail price, too high. There's my short. Where to? What was too low? Price check in aisle 3. Scale. Now, I have multiple contracts on, neither here nor there. So now I'm risk neutral. My target is here. You can see my order sitting out here. And what happens? I rotate to where? Back here. It was too high. Now we have, notice the symmetry. Too low, too high. This is the auction. Too low, too high. Another short. I did not add because I'm counter trend, but this is a TraderLab structured short. Again, counter trend. Now remember at the top of the stream, what is your trade plan? It is ride with the responsive sellers, get long, or see the short, don't get long, wait for the location for the long. I hope that makes sense. So short, short, short. This one, not so much. Target, out. And the next possible target was here. Now I'm going to take you one other spot, and please let me know if this is useful. Now, this is a volume profile. Don't let it frighten you if you haven't seen these things before. I first learned this thing in 1985 from the guy who created it, Peter Stottlemyre. And I'm telling you, I'd never seen anything like it. It was like landing on Mars. So let's look at the story. So yesterday, now remember, we had this, yesterday was longs only, okay? Right? And look what happens. We get that responsive selling when we close down here. Oh my goodness, it's terrible. I mean, I thought this was very unusual. But I also, as I mentioned at the top of the stream, I said, this might just be responders ahead of the NFP and, whatever else, and the earnings, right? So I said, well, this is interesting, and I think maybe we got a problem. Maybe today we'll be inside, or we'll just rotate inside of these 2 days. But instead, I'm above. I'm going to show you all of this, how this all works. I'm above this on the open. I open above yesterday's high. I have my overnight volume point of control here, which turns out to be the current low. So what do I know? Open high, responsive selling. Now here's the location. Here's how this works. And I'm going to show you just a couple of things. Resistance I have right here, that line. And there's a little debate I'm having with myself as far as this is exactly the right level, but it is a high volume level. The market goes to high volume. It's like shopping. That's what really amazed me about auction, is understanding how the market works. Just like you, it was all indicators for me. I thought, well, this is how the market works, and my indicators, doing the job, it's letting me know how the market works. Well, no, at least not for me. All it did was give me random outcomes and winning trades, but no edge. If you have winning trades and no edge, you're still a loser, unfortunately, unless you work that out. And we all have winning trades. Why? Because we don't have an edge. Everybody thinks it's winning trades. No, it's an edge. The winning trades over time, where the dollars actually stay on your side of the table, assuming you have a vetted plan that has an edge, requires you knowing where your trade is. And even though you pay the gamblers, like I did this morning, I'm still nicely ahead. Why? Because the outcome is random. But if I trade without an edge, I'm still going to have winning trades, but I'm going to lose. Is that you? And then you're constantly trying to fix it. So too low, Overnight VPOC long. Now, here's another little hint. Too high, overnight VPOC, and here is my support. I opened. Look where we closed. What does this tell you? Unfair price. See you later. We're out of here. Gap. Isn't that different? So, and what is this? Now, I'm going to show you a couple of little things. This is called the value area. And what it is, and it's an old market profile concept of a standard deviation. What it is where 70% of the volume took place yesterday. And it's considered the fair price. Now, in trading, there's nothing exact. If you're looking for precision, go into engineering or accounting. This is trading loads of slop. And the slop is created by volume, stops, momentum, and somebody tripping over a cord at the CME. So, but here's what's important. The market comes down. You see this gray is the volume. There's less volume as we're getting lower, just like there was less volume when we went higher. What does that tell you? Let's look at language. This is the market speaking to you. If the market's going lower and there's less volume, that means I'm running out of sellers. If the market goes up and there's less volume, I'm running out of buyers. Remember, this is shopping. If the price gets too high, you're not going to pay it. And then the market could come down. And if the market gets too low, the sellers aren't going to sell it. Well, if you want to buy, you're going to have to raise the price, you see? So that's the auction. And this is what it looks like in a profile. Now, let's get back to Bookmap. You have questions, please post them. And again, apologies if you don't find this useful. Well, so again, where are we trying to go? So this was call it an anomaly, responsive, open, higher, outside of this high, looking for this, and wherever, not a recommendation, clueless, right? Now, so you know about the open. I showed you the trades. Now I'm going to show you the long because you already saw that. So this is the RTH open. I was looking at this resting liquidity. I was looking at this. Just want you to know. But this is where my short was, I think. Yes. So this is my short. I'm trying to remember where I did this. Yeah, this. Absorption, pull back. I think this was it. And I think I took my stop. I put it back on, I think, and I can't remember. I'd have to look back. I don't remember. I can't tell you. Okay, yeah, this is. So I took it here, took the stop, and then put it back out, I think. I should be looking at the other chart. I don't want to take the time. 834. I believe it was up here. So let's see. Overnight VPOC is where I'm trying to go because that was the long. So I showed you, right, okay. So I think I took the short here, or maybe it was there. I took a short here, took a stop, put it back on, I think up here. I can't remember. And then this is too high, this is too low, this is support, right? Support. So if I got short, I think here, I scaled here, came down, then crossed above. This is another short. That's what I narrated top of the stream. I'm just trying to run along here. This is another Trader Lab short. This is your, so I took a short, I think here, scale there, hold, another short. I didn't take that one, but it is a short in the Trader Lab. Another short here, resistance here, short here. You know, these are all shorts in Trader Lab if you've vetted it. And where am I trying to go? Down here. Okay, now, and this, I only showed you my exit. Now, right here, I think it's going to zero. Well, actually, I'm looking at the liquidity, and I'm thinking, okay, going there, and I got this. Did I not label this? Oh, shoot. Sorry, shoot. Shoot's a friendly word. Hold on a second. I didn't do something. 1 second, guys. I don't know if I can fix this. I got to export something. You know, I was so busy trading this morning. When I'm trading, I'm really, I have to get my trading in the morning because if I don't trade, what am I doing? I'm a full-time trader other than the stream. So let me fix something here. and one other piece. Sorry, I was wondering why my levels aren't right, because I did not export them from my trading workstation, and it only take me a second to do this. I'll try to be expedient. Let's see if I can get this done quickly. See how I'm importing my levels? I do it manually, but it's coming off my other Bookmap, because the streaming one is on a separate computer. So there's a lot of things you can do. And Investor RT exports the real-time levels. So you can see that everything's lined up. Sorry about that. We got to be accurate, right? So this is also a potential target. So I have this and this. So I'm stalking along, okay? Now, I come down, I have my sellers. As far as I know, what do I know? Well, I know a couple of things. I got a sell sweep into liquidity. Sell sweeps often suggest counter rotation. But now here's the important thing, at least for me. If I'm not at a location, I don't have a trade just because I have a rotation. Look, sweep, liquidity. Is that a long? It's not for me. Why? Here's the question. Why? Because the market's in auction. And if this is too high, where's the last auction that completed? The overnight volume point of control. And as I pointed out earlier, the value area high. So if this becomes too low, this is shopping, and this is value, and I check it. Now I'm still in the responsive side, and the trend is up. And this is the retail price, the highest volume from yesterday. This is my area. Now, no precision. For all you engineers, I'm just telling you. You got to get the slide rule and throw it in the round file, because in trading, slop. So it's areas. Think real estate. Location, location. Where? Part of the thrill. Don't know. So how do we cope with this? Here's how you do it. Maybe. And you got to vet this. Sweep into the liquidity. No clue. Selling going to zero. I am stalking this. Absorption. Sellers are in control. Now I'm going to take you down the micro. Okay? Let's go down into the microstructure. And now what I'm showing you is an advanced process that you can learn. And this is not a mechanical. I don't use indicators. So what am I doing? I'm reading this. I'm using order flow, and I understand how the market works. I also understand that I don't know what the market's going to do. How do you like that? So if I know I don't know, I'm not in the business of predicting. I'm in the business of anticipating, not predicting. And then I have trades that have an edge with a random outcome that I'm going to use. And then I'm going to let, as they say, the chips, referring to casinos, fall where they may. So right here, the market's going to zero. I'm looking here. I'm saying, oh, we got liquidity. This might be a location. Clueless, right? So right here, so I got icebergs and I got all this 88 sell stops. Thanks for playing. They get a coupon to the buffet. And then buyer. But where's my resistance? Let's come back to the micro. I'm going to show you some ideas. So what do I know? These guys were here. They pulled. Sweep is here. I'm looking for the rotation. I get nothing. It's like, hey, what are you doing? Buyers are here. There's the buyers. The last place the buyers were lifted was here. See you later. Resistance is here. I test it. The sellers take control. Resistance is right there. Sellers are in control. Hasta la vista. Thanks for playing. Buyers above the sellers. My antenna goes up right here. Why? Why? Because this seller right here, this is order flow, Why does the market go up when you have a seller? Because they're absorbed. There's a path. There's two, there's the aggressors, if you will, the market orders. That's what delta is. Delta is a function of aggressive sellers, or shall we say initiative sellers, and sell stops, which come out as market orders. So when you see delta, you're seeing aggressors, and a stop is seen in delta as an aggressor. The iceberg is a passive participant. They're just hanging out, waiting for price to come to them. Okay? And so is this. These are passive limit orders. And we have no idea if the market will ever get there. It doesn't matter because we don't know, right? So if you know, you don't know, you don't know. I see we just got our next target at 57.19. We'll get to that. So the buying is here. Now the resistance is here and here because that's where my sellers took control. Now here I have my buyers. My sellers are here. There's the sellers. So the buyers are here. They took control. The outside edge is down here. And this is where the sellers are. So I'm going to do a little something here for you. I'm going to draw a little box around this thing so you can see it. So what do I know? Let's see what we know. If I can do this. Now this is the output, if you will. Price action structure is the output of order flow. Because what creates all this? Well, buyers are here. Buyers are above the seller, buyers are here. The sellers up here are selling over here. They're selling, they're buying. So the market rotates. What happens here? I have a seller. Where were the buyers? Weren't they there? So I don't know. This thing could just go there and keep going down to here. Right here is my sellers. Right here, these sellers were absorbed. See how it works? Buyers here, sellers there, absorbed. Buyers are now here. You can see them. Buyers above this seller. Buyer might be taking control. Resistance is here because the sellers are there and there and there. And I don't know until I counter rotate. Now I got my buyer. Now I got my seller. So consolidation, break high. That's a buy trigger. Now, if you can read order flow, and this is just price action to help you see it, you can be getting long in here, in here, in here, any way you want. Okay? Now, what's important here? Because that's a retail price, and so is that. You can get there, c'est la guerre. Where am I trying to come? It's now mean reversion. Where's the mean? This will make you crazy. There. So if I get long here, I got to scale ahead of the mid. And why? Liquidity. Liquidity was here. Liquidity comes back in here. And what else? Retail trader behavior. Think like a retail trader. Don't act like one. What do? Sell the mid. Maybe they're going to be right. I don't know. But what's the context tell me? Up. What did this tell me? Too low. Think of this like shopping. If this is too high, where might too low be? There and there, uptrend. If it becomes too low, what do the shoppers do? Is this really too high? Let's check the price. Why did we come down here? To check the price. Too low. Well, let's go back into the store where we thought it might be too high. If we think it's too low, let's go back and check this. And we have to scale because we'll get mechanical sellers. And where might the market come? Where might the market come? Mechanical sellers. This is Trader Lab. Where's another long entry? Let me show you. This doesn't blow your mind. Well, I'm not saying it should. I'm just saying is watch my other streams. Where's my entry? Here or here. If you're order flow oriented, or here on the pullback, there's the mechanical sellers. Buy stops are going to be here. Where's my target? Here. There. See it? That's just the log. Okay. Are you guys tracking? Sorry for taking so long. Are you guys with me? Do you have questions? Please post them. Please give a like if you're in YouTube. Support the stream. It's the only way it'll continue. Since there's no cost for it, so then where are we trying to go, you say? 5,700 in this. Whoops. I had too high, and the ETH high. What was the statistic? I know you wrote it down. I know you guys write this stuff down. 76% probability, and you have to vet that. And what about getting to the overnight volume point of control? I know you wrote it down, 79%. Does this help you? And they're not predictive, but when you have alignment, it gives you something to work with. Now, this thing shows up here, and I get a sweep. Next target is ETH high. And there's more. Really? Yes, there is. How do I use order flow? What is this? Well, if I have my sellers here at the ETH high, which was made here, and then I go into RTH open, and this stays in the book, and I have a high probability of getting here, what do I do about that? Have you thought about it? If you're not using an order flow tool, you're going to have to keep looking at this thing. Me, I don't want to look at that. I want to look at the delta. I want to look at the sweeps. This is what the heat map does for you. I'm not looking at this. I get dizzy and fall out of my chair. So I'm looking at the heat map. What do I know? Sellers. So what do I anticipate? I see the sweep. I have to scale for me in front of this. And this adds, as you might say, the icing on the proverbial cake. Now let's come back here. I'm going to try to get caught up because I'm trying to cover multiple things. Now, when I'm trading, I'm not, I'm just kind of following this thing and I'm narrating it and I'm trying to read it. Remember, I don't use an indicator. So what do? What does it say? Well, if the volume is down here, this is my new retail price, variable high volume node. And I did a special webinar on this called VPOC migration. Now, nothing is mechanical. If you come to Trader Lab or any other trading process and you think it's plug and play, and now you have an ATM in the basement, you're going to be severely, underlined, disappointed because that's not the business. We all would like it to be that. We're all looking for certainty. I get it. Believe me, we all get it. But if that was the case, we'd all have done it already. And many of you are out there having spent 5, 10, 15 years, whatever it is, trying to create certainty, tuning and tweaking indicators and timeframes. I'm going to suggest, by the way, if it works for you and you're consistently profitable, even though we all take losses, bring it to Trader Lab because I don't know about you, but in 46 years, it never worked for me, even though I had boatloads of winning trades. And it took me a long time to figure out why not. Nobody told me. All my buddies were floor traders. There were no off-floor traders when I started. It was like being under a rock somewhere. But I had to make a decision, either go down on the floor, get a membership, or forget about it. And I forgot about it because I got really interested in what I was seeing here because I have an analytical mind, not a street fighter. Actually, I grew up in Brooklyn. I was a street fighter, and I said, I think I like a cerebral approach better. This is too low. Now, I don't know, but what's too high? Here, shopping. It's on sale. Well, if I watch this, if this is too high, this is my resistance. Where is too low? Right there. I can do the following. If I get long here, remember, I'm anticipating this, and if I didn't get long here, I'm anticipating the sellers. These are the retail traders who are mechanical, who don't understand how the market works. And yes, they win. Gamblers get paid in the casinos. They deserve something. And the cocktails and the ticket. But this is a structured entry. And you got to, when you come back to the mid, you got to scale still. So long here, scale. Long here, scale. Because you might, if these sellers overpower these guys, then you're going to fall out the bottom and go to the next target below. That's not too hard to imagine. So process. This right here, when it shifts down, two possibilities. Too high, and we're going to go back. Let me show you where. To there to check that is this too low. That's the possibility. So trade management, risk management. And if I bounce that way, everybody can be in trouble down here. If I now this is after getting to the mid, right? That's why I got to scale mid. Just in case. There it is. Long scale. You can do this. Then break, this drops and I either reject or break high. I break high, the language says too low. If it's too low, what was too high? This. Watch. Scale. Again, or nothing. Or if this is too low because I rejected it and that's too high, that's resistance, I can buy this and scale ahead of this. Another Trader Lab trade. Let's watch. Where am I trying to go? Over 90% probability. I'll take that. What about you? There's more. Right? Here is our next target. And I see we got there. Look at that. See the right there? Okay. Is that it? Am I in real time now? Here, let me show you a little more of this. Now, what you're seeing me do is strictly simple. It's simple. This is not complicated. If you ever shop in the grocery store, you understand trading. What you don't understand is randomness. And you're going to fight randomness because we're wired to avoid risk, so let's accept that. None of us want to take a stop, of course. Everybody's looking for certainty and confirmation. In your self-talk, if you're saying, if you're thinking confirmation, right there, you've got a problem psychologically. You're not in a business of confirmation. You're in a business of maybe. This is another structured trade. I haven't seen any of this, because this just happened. Let me show you this one. Now, where are we trying to go? Liquidity is here. Let me show you now. This gets into different fractals and time frames. Here's my liquidity. I have a buy sweep. What do I anticipate? Well, not predict, anticipate. I anticipate counter rotation when I have sweeps. So I have this liquidity. We get through it. What's up here? Selling icebergs. Whoa. Almost 1,000 icebergs right here. That's selling. Okay. Well, if I can, in the sweep, you see, that tells me the possibility of counter rotation. If I counter rotate in this price, I got to label this stuff here. I got to make sure that's labeled. Because when I'm narrating, I got to tell you, multitasking, and when I'm trying to go fast, because my time is so limited here, it seems, for me, an hour and a half is not long enough to explain it to you. But if you want to learn this, the Trader Lab is available to you at no cost if you use the link in the bottom of YouTube. That might be something to think about if you're interested. So what's happening here in the auction is that retail, the yellow line's the highest price, retail price. Think of it volume. This is what it is. And when you go to the store and the price, there's a retail price, it has high volume. Everybody agrees to do business. Well, what happens if the price goes up and the high volume is at a higher price? Everybody's accepting it, you see? So the price and the volume move together. That says higher. Now, there's another little issue with higher. If I find too high, wherever it is, then we're going to potentially rotate on top of ourselves to take the stops out of these longs in this leg because their stops are under here. All right. So I know this is support right here. I know this is too high and I can rotate. Now, subject to my plan, I can have my stop way outside and I'm in the Barca Lounger, with my pizza, or I'm managing my trade, and that's all something you have to bet. What fractal or time frame do you trade in? Well, I like to trade for larger swings because I take stops, unfortunately, right? So the only way I've managed, for me, psychologically, is to, of course, accept I'm going to take stops, overhead and cost of production. Remember, casinos pay to gamblers. Everybody, you got to pay your bills. But when I get on the right trades, they're 10, 15, 20 point or more trades if it's in the structure of the market. So I look at it like I'm testing the market for locations, and I'm willing to take stops to get on the swings because that's where I get paid. Other traders are going to be looking at this and thinking, oh, I'm going to sell this, I'm going to buy this. Well, I find for me, when I'm putting the same risk on to go from here to here, or I can just use this for exiting and trade management. And this is a micro short right here. Why? Sweep, liquidity, resistance, break below, test. This is another little element. Too high, retail. So microstructure, here I'm going to show you an advanced concept. If you're interested in it, let me know if you want to see something advanced right now. I need you to respond right away. Yep, okay. Advanced concept, guys. This is microstructure. And the thing about the auction is it happens in all time frames and fractals. So when I'm narrating, I'm always narrating the market, and I'm interpreting the language. Think about what happens. What are our indicators? They're interpreters, but they're lagging and they have no concept of the condition of the market. The fact the line or a piece of spaghetti crosses over a line has nothing to do with trading. Subject to your time frame or fractal. And they all work at times, that's the other thing. And if you have an edge, again, an edge means not winning trades. It means profits. That's a difference, isn't it? So I see the sweep. This is resistance. What happens? I go higher. Now I'm at microstructure. I do not know anything, and I can prove it because I can't predict. Right here, I have my sweep, and I'm thinking this because that's my next layer of liquidity. And this is support right here. Now they're gone. I get my sweep, and it says counter rotation, but I don't know. I can have anything anywhere. I can have a sweep, and it doesn't do anything, because it's all random. Now I'm going to show you, and I posted this in TraderLab. I try to post while I'm trading, which is a little difficult naturally. Let me show you structure. Now you're going to see me do something that I did down below at the overnight VPOC. What I'm showing you is fractal trading, and fractals are just microstructures, and they're auctions. The way I relate to this stuff is shopping. And I had to kind of relate it to something I already know. I'm not trying to come up with some esoteric thing I don't understand. I'm coupling the behavior to what it actually is. What's too high? What's too low? The buyers are there. The sellers are there. The sellers get below the buyers. Now look over here. This high volume sitting here. If this is a store and the volume or retail price is here, and the shoppers leave the store, what does it say? Too high. Microstructure. I'm not paying that. So where might we come? Well, if that's too high, I can anticipate maybe coming back here. And it doesn't have to. And where did we come? Let me show you. Where's my structure? My structure is in here. There, it can be there. There's no precision, right? So where do I come back? Here was also a microstructure. Now I'm getting a little more advanced, but just right here. Now, so what do I know here? Here's what I know. Sellers are here. Buyers are there. Sellers get below the buyers. I get a sell sweep. Sell sweep says potentially counter rotation. And there it is. Didn't quite get there. This is an entry, and this can be an entry. This can be an entry, but you're too far away. If this doesn't, and I'm not saying an entry to get short, this right here is an exit for me. This is where I'm going to be looking. Here and where else? Out here. Mid VWAP. So let's see what it does. VWAP. We have a structured trade in TraderLab called VWAP to VPOC. and this is your support. Let's see what it does. Where does it go? Let me move this. What I'm showing you is structure. And the idea of showing you structure is to help you understand market mechanics. Now, this is not a short, is it? But it is resistance, and there's my sweep. What does that suggest? Counter rotation. What is too low? Here, here, here. Here to there. This is all fractal trading. So how does this work? I got this. I have this. Back to that. I have come across the range. I'm looking here. And I know, what else do I know? Stops are under the swings. So when you are looking at this, at least when I look at it, I go, what does the market do? Remember this? What's the job of the market? Facilitate trade. If I find too high with a sweep and a sweep at too high, what can I do? Where's too low? Wish I knew. Where's the stops? VWAP, mid, and where's my support? Here, here, and here. Now it's coming down, and I'm looking, is this an anvil that I'm going to catch? What do I have? Into this, and mid is here. These are my locations. Yesterday's high. I'm outside of yesterday's range. What might I do, you ask? Location, 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 always clueless. My sellers are here. My buyers got thrown under the bus. Thanks for playing. We'll send you a coupon to the buffet. Sell sweep sets up the rotation. Sell sweep sets up the rotation. No clue. I want to remind you, clueless. Where's my sellers? There. Where's my buyers? Now, these guys are being absorbed. I can see it. I have my icebergs. You see them? Icebergs. I'm seeing the buying. But just because they're buying doesn't mean I get long. I need a trigger. This is something you'd learn in Trader Lab. Sellers are here. They were absorbed. Buyers are down here. Buyers get above the seller. Teeth start chattering right here. Buyers got above the seller here. Teeth started chattering right here. Sellers are here. Buyers are here. Sellers are here. Sellers are here. No clue. Sellers are here. Going to zero. Buyers above the seller. I got my sweeps. Same thing here. Same thing here. Where's my sellers? Here. Okay? Going to zero. Watch. Buyers. Oh my goodness, it's changed. Watch. Now, what do I do with this? Good question. Let's put some structure around it. By the way, I hope you're getting something out of this, and I'd appreciate if you give a like and also subscribe to the channel. And better yet, if you want to learn this, and you got to roll your sleeves up, this is not, you're going to have to actually, let me show you this. Now, if you understand order flow, you would be able to enter. If you are looking for more process-oriented, what's the word I want to use here? Price action, you might not get an entry. Let me show you. So this is our outside edge, variable high volume node. We are still above yesterday's high, out of range. And don't forget what we did. We checked below and we found too low right here. So no reason to take a short, only longs, or your stop is out under the low of the day and you're taking a nap. See, that's why this is time frame based. It's not anything else, or fractals. This is a long, I don't know if you can get in here. For me, and I'm not recommending this because this is much more subtle. When I get the buyers here, because my sellers are here, I can take a long here. And I would get filled up here and I would have my stop under here. So it has to fit your risk parameters. It's like a 4 point, I don't have a 4. I am running 6 point risk for me, not a recommendation. You got to vet that. And so what I'm saying is I'm willing to take a 6-point stop for my trade. I don't take a 6-point stop. I use structure. So this is my resistance. Why? This is where the selling was. And what do I have here? These guys come in the book and this is resting. I also have at 9:30, I don't think I took the IB out. Guys, we didn't take the IB out, did we? Until here? Is that correct? Can you confirm that? How are we doing, guys? Are you guys with me? Okay. This has over a 90% probability. So when I'm stalking these longs, you know what? I missed something here, I think. Yeah, this is my location. I think I'm losing my mind. This is location, 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 right? So this is the sweep, the long. So I anticipate locations. I don't predict them. And I also know I can come back into the range. I mean, I know all those things. I just don't know what it's going to do. Part of the thrill. So it could come out here too and then rotate back here. So I know all of that. But if this is a sell, I'm looking for the long, and this has over 90% probability, and I know my sellers were here. So if I'm coming back up here with a 90% probability, I'm looking at this. Long. Now but I'm in an uptrend. So option, scale here, or skip it and go for the 90% probability because we're out of range. You see what I'm saying? That's trade plan specific, and that gets a lot more nuanced. This here, next scale, and then the target above is on the map, and I'm going to get into real time now, is there. So that's it. Done, finito. Time for a nap. How are you guys doing? Is this good? If you like it, please give a like if you're visiting in YouTube. It's really important because since there's no cost for TraderLab, Bookmap doesn't have a way to kind of, they're giving it away. And I've agreed to do this. Part of it has to do with what I went through trying to become a successful trader. It was horrendous. There was no information, no PCs, no internet. You bought a book, went to a seminar. That was it. And I can tell you, I didn't learn anything in seminars except not to go to them. In the books, they never taught me how to trade. Don't you wish? And then I built systems. That didn't do it either. So then what does it? Why doesn't that stuff work? Even though, see, here's the problem. It all works randomly. But if it doesn't have an edge, you're going to lose. And I always thought, look at this, it works. Let me make it better. Logical. So let's go back. Let me see if I got anything above us. Now, for me, I could be done other than trading rotations. And if you guys think you're here to sit in front of the screen and chase the market around, I'm going to suggest your job is to take trades that give you an edge. And then the rest of the time, leave it for somebody else. You need to know your trades, and you also need to do the research to know when not to trade. Why would I get out here? See? Why is that on my chart? Now, I have a couple other trades here. Now it's Friday. Let's get back into the real world. What happens on Friday? If you were long, what would you do? Answer the question. Think about it. Would you take profits, or would you stay long through the weekend when anything can happen? And especially with the media activity of POTUS and, the volatility of the current environment we're in, tweets, tariffs, whatever, stuff's coming out all the time. That creates more risk, more uncertainty. If you're long, what are you going to do? See, you got to think, what's the environment? Right? Well, how do you manage risk in that environment? Well, first of all, you manage risk every time you step in this environment. But the other part of it is, I think the risk in the volatility is heightened based on just news drivers and fundamental inputs that disrupt the flow of the market. Okay, somebody trips over a cord, somebody sneezes, a tweet comes out, and then you get a 20-point or 10-point whiplash. There's no way to avoid it. It's part of the random distribution of outcomes. You are not responsible for that. You know what you're responsible for? Your trade plan. That's it. You can't control those things. The only thing you control is yourself. Now, how do you build the business of trading, right? Have you ever thought about seeing this as a business? And it's not just clicking the mouse and somehow there's an ATM in the basement. Because if you've been doing that and you're not successful with it, I'm going to ask you why you're going to keep doing that. You know, maybe you can learn from your experience. I call that trapped equity. All the losses and brain damage that you've incurred over your development is valuable. The thing about it is, you may not understand why you keep waking up in the same place with the same results, no matter how hard you work or how hard you tweak and tune. You see? And I thought when I built systems that I would take that idea and just do it better because now I could optimize. If you're eyeballing the market, you're optimizing, you're curve fitting. I did it on steroids with complex conditional processes with branch logic. And this is in the mid 80s, so that was very cutting edge. And in spite of having optimized results with great metrics, when you transpose that onto today, today is not yesterday or last week or last month. Isn't that a problem when you're trying to kind of create an edge when you're not in the present, but you're in yesterday or the month before? Do you see what I'm saying? So that didn't work for me, in spite of the winning trades, the winning weeks, and even winning months. It did not work because you cannot chase the market on yesterday, or maybe yesterday you can look at the market and get information from it, but you can't go too far back because if you're a swing trader, it's a bit different because of time frames. But in what we're doing here is this is the same as a swing, except the range is only this to this. Why does the market go up and then go down? It rotates. Why does it do that? Because it finds excess, comes down to what was resistance and finds support. You see? This is support, and I'm getting very advanced on you guys, but this, and it doesn't mean you buy it here unless you're this type of trader, this range. For me, no interest in this. Why? Because my risk to get long to come here is the same as getting long here to come there. You see what I'm saying about risk reward? Does that make sense? How are we doing in YouTube? By the way, guys, these streams are available, and I have special streams, things that I don't make public that are specifically for Trader Lab participants. I also do live narration, not trade calling, narration. I've trained a fair amount of traders over the years. If you were sitting on the trade desk with me back in the day, you might not find it tremendously pleasant because this is a business of discipline. Discipline is everywhere, and lack of discipline and losing concentration and responding to emotional stimulus is our greatest enemy. I believe anyone can learn how to trade in the Trader Lab, and I think if you come to Trader Lab, you can ask traders. But why don't traders succeed no matter where they go? And why don't traders accept a process of learning and self-education that has been proven to work for other traders? And not everybody, because there's many elements to this. It's not complex. The lack of discipline to vet one trade is a function, a manifestation of FOMO. Because if you can't trade one structured trade and put a process or a template or proof of concept together, you have no way to know that you can even do this. So in the Trader Lab, what I've always suggested, and I'm going to say human nature being what it is, many traders don't listen because they don't understand FOMO. They don't understand in their hurry to take many trades and have many setups, they're actually building in their own failure. And it frustrates the heck out of me because I understand. Then they're done it. And so have many other developing traders who are no longer in the business. And the thing is, it is emotional triggers. I want to make money. And it's that greed and it's FOMO and it's psychology. And most of us, the psychology we bring to trading does not work in trading. The psychology that protects us in the outside world and works really well, getting approval, from our peers or, parents or whatever it is, our socialization does not work here. You will not get approval from the market. There is no certainty in the market. Your need to make dollars and get approval and to prove something to yourself and to be profitable has nothing to do with learning how to become profitable. It actually is the basis for failure. Isn't that counterintuitive? If you want to build a business, you have to prove to yourself and install the components that align psychologically with you individually, that you can groove with, that you can flow with, that you can deal with, that has a yield that covers your losses and overhead. How do you find what that is? It's not by throwing plug and play on. If it worked, we'd all have done it. I can tell you right now, back in 1980 when I started trading, if there was a seminar that was proven for $10,000 in dollars that were worth something in 1980, I would have got my checkbook out or worked, delivered pizza, done whatever I had to do to attend it, and then I'd move the ATM in the basement. Right? Wouldn't you? Well, it doesn't exist. So why are you doing that? Now, you have trapped equity from all your experience. I kind of think of trapped equity like tuition. We've all paid a substantial amount of dollars, right? Now, many of us are going to keep repeating the course because we're hung up on, I've got winning trades and I just got to make it better. It's logical. But let's compare this to gaming. In the casinos, the gamblers win. But the casinos only play games that have an edge that favors them, even though they pay the gamblers. This is such a simple concept. So we are going to win. But if we don't have an edge, or we don't know how to get an edge or execute an edge, we're going to lose. I mean, that's it. There's nothing more to this other than you need to learn how to operate in an environment that's 100% random 100% of the time. Another problem for us. And that's what triggers our emotional states that make us not act in our best interest. Fight, flight, fear, chasing, all this stuff, skipping trades, moving stops. And everybody has that problem because we are not controlled by what's in our best interest. We are controlled by our primal wiring, which is set up, and it worked well when we were out on the savannah with the saber-toothed tiger. Run from the risk. Well, here we have to run towards the risk, and it's counterintuitive. So we're pushing back, and I call that Hyde, Jekyll and Hyde, the lunatic under the hood. That lunatic has more power over you than you can imagine. You've never had to deal with it in a constant random environment. And randomness triggers fight and flight, you see. Because if we're not sure what's behind the tree or the rock, maybe it's a predator, we're going the other way. That's why if you take a stop on your last trade, you don't take the next one. Because you're still in an emotional state from being bit. But now you're very cautious. That doesn't work in gaming. In gaming, if the casinos pay somebody $100,000 and they walk out with it in a suitcase, they just deal the next hand. Why? Because the only way they get the win is by playing their edge and accepting the random outcome. That's why I showed you the first trade I took on the open. I took a stop. Now, I don't recommend and I don't recommend anything, but in the Trader Lab, I always say, don't trade the open. It's high risk. I trade it. Why? I can. Do I take stops? Every day. Do you? Every day. So, take less stops. Get on trades that have edge. You're still going to take stops. And then, subject to your vetting, what is the range and the structure that gives you the opportunity in a random environment? For me, this was the target. Me, I'm okay with that. Are you okay with that? That's what Trader Lab is. And again, if you're looking for action, I mean, I don't know, go to a casino. Get the cocktails and the ticket to the buffet. Do you see this here? Sweep. What does that suggest? Counter rotation. Is it a short? No. What's the trend? Up. Might it be the end of the move? Maybe. See? Questions. And please give a like. I need the likes in YouTube. It's good to be liked. I like to be liked. Fairfax, you're asking me if it's trending revert to the mean today. Well, at the moment, we're going north, but it's not a trend configuration, though we do have something called a double distribution here if I take a look at everything. Stuff's just, hold on. Gotta take a look at what's going on. Yeah. This, what you have here is very interesting. And we have further to go, it looks like, on the upside. Not a recommendation. This, let me show you a little something here. Something, a little tidbit for your dining and dancing pleasure. This is support, right? I did mention that, didn't I? Break high, sweep, counter rotation. This is an advanced long in the Trader Lab, just saying. But for me, if I hit my target, if I took a long, this is where I got to scale. Why? I found my sellers in a sweep. Now I'm down in shorter time frames, okay? And if you want, I'm not saying anybody should trade this. I'm just showing you, because here's the thing about the auction, very interesting. The auction is a process of price discovery. The range is what we need. The auction is the auction. It could do it in a little, it's the same. Or if I get this, I'm going to get the same behavior. If I understand market mechanics, then I can select the trades and the locations based on what I've vetted. This is a advanced long to there, because that's where the sellers dropped it, you see. So the buyers up here, see the liquidity, were absorbed. No clue. Break. Where's my buyers? They were here. They're in the liquidity, right? This is advanced, but just letting you know. And there's these icebergs are sitting out here. They want to buy. So I had buying icebergs hanging out, 477. Didn't get filled, I don't think. Can't tell. And anyway, long to there. Where's support? I'm going to draw this in for you. Guys, there's so much I could teach you. And I'd love to. I mean, I kind of get, excited about it. I mean, I get excited about it because I can share it and I can help you. This is support. There's a long. There's resistance. There's a scale. If I come down here, I have microstructure. Now, this is way advanced, but this is also a long. Break high, micro, absorption. I'm way out now as far as advanced methodology. And this is not anything you should do. If you can't do the broad strokes, this will be like throwing a grenade in your lunchbox. There's the sweep. There's the rotation. This is micro support. I'm getting way into the micro. This is like an electron microscope. Support, buyers took over. Sellers were here. What does that set up? If the sellers were here, I'm going way down in Fractal, and the sellers are here, and they're absorbed again. So, support, absorption. This is where it fails. Break high, test of these guys. See, I'm going into fractals. Entry, resistance, rotation. Now, this is not anything anybody ought to do. Let's look at the concept. If this was here or here, it's the same, except now I got the range. So in my trade plan, if I understand and I learn the language of the market, and this is foreign language, right, guys? I don't use indicators. And I make a point of it not using indicators because all your indicators doing is the same thing I'm doing, except I'm doing it here, and I'm using a compound process of multiple inputs, but not a lot of them to create confirmation. I've stripped everything away. So I have minimal conflict and ambiguity. Years back, I thought more created more certainty, right? You know, so I had more. I had everything. It didn't matter. And I reverse engineered. I wrote, as I mentioned, systems and my own indicators, hybrids, really advanced stuff, really great stuff, but conflict. So I went the other way. And it was very difficult for me to let go of stuff I worked on for 10 years, 12 years. Think about, you invest. What's the saying? Well, I got something out of it. Well, I figured out, what did I get out of it? Not what I want to keep. What I got out of it is what not to do. Instead of trying to fix something that was defective. I didn't know what business I was in. I figured it out, unfortunately, after many years, that I was not in the business of confirmation. I was always in the business of randomness, ambiguity, and fear. Yeah, fear. And I had to learn about my fear. And why did I have fear? Well, I'm in a 100% uncertain environment. I'm certainly going to be fearful of that. But it was always, I didn't have tangibility. I had only emotional triggers. So I didn't have statistics or edge. Casinos are not fearful. They are detached from the outcome of the next hand because they know over time they're going to extract dollars. I didn't have that. So what I had was only the lunatic, which is fight and flight, fear, FOMO, and, confusion and conflict, right? So, and the way I overcame it, for me, not for you, me, and maybe for you and other traders I've trained over the years, was to create tangibility or statistical probability of a behavior. If I see this, what's the probability I'm going to come back to this? I know that for me. Now, I may not take this trade because of range, because my risk is going to be out here. But if I know my risk is here, I may buy this with a stop under here to there. And then I'm risk neutral. If I hold this, I'm good. If I buy this, what am I doing? Well, I know there's support. My stop goes under here. Except you see what I'm saying? Same trade. If I buy this, my stop goes under here. Same trade. Where am I going? Back here. There's my sweep. There's my counter rotation. Is the trade over? I don't know. Do you? Not my job. What's my job? If this is my trade and the trend is up and I know I got to be careful, then I could just take this to this, this to this, and stay long with a runner or, again, go back in the Barca Lounger. Are you getting something out of this, guys? Please give a like. And if you want to learn this, not plug and play, you want to maybe learn, come to Trader Lab. There's a link in the bottom of YouTube. There's no cost. And while it still exists, and I have to just remind you guys, it's not going to exist indefinitely. When I'm doing this, I am not trading. And as you guys have seen over and over again, I narrate 20, 30-point trades. And I have to tell you, that kind of sticks a little bit, bugs me a bit. And so I've kind of put myself in a position here where I do my trading in ETH and up until the time I stream. And lots of times I'm not going to put a new trade on, once it gets around 10 a.m.-ish or so, unless I'm currently in a trade. So I'm just saying. So there's a limited time I'm going to do this. So you might want to give me some encouragement and the Trader Lab encouragement by leaving a like in YouTube and subscribing to the Trader Lab channel. It's basically no cost, and it gives you access to all the additional education in Bookmap server, stocks, options, crypto, order flow with a high-tier tool like Bookmap. How do you use this thing? There's no plug and play, guys. I mean, there are some traders who think any tool you get, you got to put time in. If you want to learn how to trade, this is not a 30-day process and then you move the ATM in. You got to roll your sleeves up. You are competing against the best minds on the planet. And even other retail traders which are really who we are competing against, if they are like you, most of them don't understand what they're trying to do. That's why there's a 90% failure rate, is my understanding. Why is that? They're all doing the same thing. Well, if there's a high failure rate, are you doing what they do? Well, think about it. If you are, then either keep doing it, maybe you'll figure it out, or maybe figure out why it doesn't work, even though you have winning trades, and then figure out maybe if there's alternative solutions that you can relate to. Nothing can say you'll be successful at this. It's going to require more than you imagine. And what it requires is methodology and self-discipline. And discipline actually relates to even how you learn. So you see why I scale? So if I'm risk neutral, this trade fails under here. The worst that would happen to me is a couple burgers in a basket, maybe a side of fries, if it comes under here. Otherwise, I'm just sitting here. Where are we? Look where we come. Now that's not magic, it's auction. And it doesn't mean we won't take the stops out and come down here. Next layer, you see? And what else? Let me take you into auction world for a moment. This is called a low volume node. And let me explain, this is all auction. See, there's pieces. You got to actually think in multiple dimensions or time frames as you think of them. Remember, there's no time here. Here, there's only fractals, auctions. That's an auction. Oh, I'm not paying that. Leave. Let's come back and check the store. I'm really not paying that. See? Where do I come? Well, this is too low. I get a sweep here. What does that say? Let's come back here. Maybe. And again, why? High volume. Now I'm in fractals. I'm going down in, as you think, time frame. And what I'm in is microstructure. I'm not trading this. If I did trade it, it's here. You see? And here to there. And here to there. This, not so much. What's the trend? Can it end? Yep. Do I know? Nope. What do you know? Hopefully more than I know. But because I know I don't know, that's all I got to think about. I don't need to think about what it'll do. I don't have any clue what it'll do, you see. What I know is what it might do. And I understand how the market works. Low volume node, what is that? This, I'll give you a little something to think about. Remember, when we got to the low, the volume, you see how this curves in? We ran out of our sellers. So if the buyers wanted to own this thing, they had to start paying up for it. And that's why it rejected. Then we came up here, and this is a fair price. That's the volume point of control. This is retail in this, it's called a distribution. It's basically a big consolidation. If I leave it and I start a new distribution, it separates it with something called a low volume node or an outside edge. So it's rotating. So, and that's what the market does. What's too low? What's too high? What's fair? Well, if the fair price is here at the moment and I stay above this at the moment, then what do I have? That next target. And it might, or here or there, don't know, don't care. So I have structure. So this is the auction. So what it told me in the language is too low. So now where's the new retail price up here? There. So if I rotate outside of that retail price, what is this called? Mean reversion. Outside in trading in alignment with the trend in a fractal. Make you crazy? Accept my apologies. Made me crazy. Still does. But I understand it. I don't predict it. I just understand what's happening, and I can read with order flow what might happen. I know I have liquidity, and there's my buy sweeps. That says rotation. I have my sell sweeps here. That says rotation. Where's my sellers? They're up here. See? So I got to get through this liquidity to continue. If I can't get through it, then I'm going to counter rotate, and the stops are under here. That's the fuel. So either continuation somewhere, part of the thrill, trade management, or too high, and then the market rotates on itself. And if I come out here, I have another trade for a continuation long, not a recommendation. How we doing? We doing okay? Ben, it's not a trend configuration specifically. Ben is asking, why is it not a trend? It's an up move, but for a trend, see, this is auctioning. It's rotating. A trend day specifically is a runaway freight train, and it has little rotations, and it's going, I don't know. What about this? Nah, I'm out of here. That's a trend day. This is, unless it changes, into where it just loses its mind. But at the moment, it's not a trend day, but it's a directional day. And at any time, this can come down here. And then it's mean reversion back here. Hope it doesn't make you too nutty. So what I'm sharing with you guys is multiple fractals or time frames. Coming back here is a retracement to the mean for the long. Coming up to here is a retracement to the mean, to the exit. Coming in the fractal back to here is micro return to the mean. Coming back to the micro high volume up here is return to the mean. This is all fractal. Now, what's fractal mean? Matryoshka dolls, Russian dolls. I'm trading inside of itself. The market is inside itself. So when you think multiple time frames, I don't use time. I use behavior because it's the auction. The clock does not regulate this thing other than the RTH open and close. Everything else in between is based on participant behavior, at least as far as the auction goes. Now, I understand lunchtime volume, contracts. I understand when the EU closes, we can get a counter rotation. Still, the participants are the ones that tell us what to do, at least for me, because it's the auction. The immediate feedback is what's happening right now. And the purpose of the market is to figure out, what is this thing worth? And of course, we don't know. So we get in there with the participants and we participate to try to find and discover that. But if we understand market mechanics and why this would be a long and why this would be a scale, then I think we have a lot going for us. And if the trend is up, even though it's not trending, we only want to take longs until it changes. Please give a like. Use the link in the bottom of YouTube. If you're inclined, there's no cost for Trader Lab. Download the 60 PDFs. Take advantage of the library of webinars. There's no cost for this. You need to verify your email so we know you're not spam and we keep the community pristine. This is what the Trader Lab looks like. It's a community of like-minded traders have come together. Senior Trader has over 50 years trading. You know me, I've been professional and out here with you 46 years and aging well. This is the library of webinars. Thanks, Ned, for curating this. Everybody in Trader Lab, when you see Ned, throw a hug in his direction. Watch the primer webinar first. It'll give you a high-level overview. Then meet the Trader Lab. This is advanced trader education. And then this one, I planned, I saw, I traded. And then follow this every day. Also, remember, if you're in YouTube, I posted a special short trade in there for you to look at. It's about 30 minutes long. And remember, if you want to visit Trader Lab, be sure to verify. Use the link in the bottom of YouTube. There is no cost. Thanks again, guys. Appreciate it. Be sure to save these links. If you want to watch this again, visit the Trader Lab. I look forward to meeting you there. Have a super weekend. And thanks for visiting. I enjoyed sharing what I do in the Trader Lab with you. Take care.